July week 5, 2020 on the S&P 500, and we're getting ready for earnings from the bulk of the S&P 500, including Apple, Amazon, Google, Facebook, so on and so forth. We were supposed to have testimony from the CEOs of all those companies on Monday, but there was rumors that that was going to get postponed, which when you think about it makes a lot of sense, since if they're going to be reporting that week, isn't there an SEC rule of a blackout period that you can't discuss company business during that time? So maybe that's why they came to their senses and postponed that until after that earnings report is out of the way. Or it's just because Congress is busy working on the stimulus package, part 2, and maybe they don't want to waste time on that. Okay, so here we are. We're looking at our S&P 500 daily roadmap. Here's what happened on Thursday and Friday. On Thursday, we had a sell-off after we failed to make it up above 32.80, playing out the 80 handle roll perfectly by printing a high at 32.79.99. And then we recoiled off of that, and once we broke down below the entrance to the gap, which let's just round it off to 32.60. It's 32.59.81. Once we lost entrance to that gap, we basically tripled down on the day, finally hitting our low with a tag of the 10-day simple moving average and a look below where we had opened this week and closed the previous week at 32.24. So there were buyers sitting here to turn it around at the 10-day simple moving average and at the open and close of the week, a level from the weekly chart as we were heading into Friday. Well, to take care of that, we just simply gapped down below all that stuff on Friday. And at our high of the day, we took a look back above our low from Thursday, where the week had opened, where the previous week had closed, rejected all of that and sold off all the way down to 3,200. The low of the day was 3,205, sort of meeting this area here that goes back to July 14th, where this was the last time, July 14th was the last time we closed below 3,200. And since then, we had a couple of days where we came down and tried to meet this closing level here. So it is still technically a tiny little gap that's still unfilled. And then with Friday, we still couldn't break down below that. In fact, on Friday, we couldn't break the 3,200 handle. These two lows here were 31, let's see, 30 was 3,200, and this one was 3198.59. So what's to happen next? Maybe now that that hearing has been postponed, maybe we're going to try to move back up here again. I don't know. Or are we just going to come in and how we took care of this business here on Friday of holding above the 10-day and holding above 32.24? Maybe we're going to take care of business by just gapping down below 3,200 and finishing off this sell-off that the market wants to see happen. And where would this sell-off lead us to? I think that ultimately we would be looking for a test somewhere in the area of the 50-day simple moving average. I think we would bust right down through this 20-day and work our way down here towards the 50-day simple moving average to this 31.15 handle, or maybe only to this 31.36. But somewhere in this area here, 31.15.86 is our July closing low. That was the close on July 1st. There are some lows that happen here at 31.36 on July 7th. I'm sorry, July 8th and July 10th. Maybe that's going to hold a third test here, and we're going to move up from there, or maybe we're going to test down a little bit lower. But the rising 50-day simple moving average is going to be around here by Monday, and it's going to be above this level by Tuesday. So if we're going to go on through Monday and Tuesday selling a little bit more, maybe following that Thursday, Friday, Monday, Tuesday sell pattern, and if we, kind of crescendo down Monday and Tuesday morning and reverse around in this area here, you'll understand why it's a test of the 50-day simple moving average. Looking at the weekly chart, just really quick, when you get to Thursday, Friday of each week, no matter whether it's the S&P 500 or some other stock that you're trading, look at your weekly chart and you can see here, here was the low. On Friday, when we got our lower low on the week, it was a test below where we had opened the previous week. You look at the candle body of the previous week and you could see that that was where the buyers were perched. So it wasn't just about the 3,200 level, it probably had something to do with the open of the previous week. That got us, to reverse, but finally at the close, we didn't want to close above the previous week. That was sort of the battle at the end of the day. Were we going to be able to close back above 32.24 to put a higher weekly close in, or break this pattern of these higher weekly closes that we had been putting in? Looking at the S&P 500 all cleared out, the daily chart, you can see, the last time we got any kind of contact with the 50-day simple moving average was all the way back here in April. So if you're sitting there listening to the first part of this video and thinking, oh, there's no way we're going to sell off a lot further than that, than what I showed you, look at a daily chart and you will see that we don't even get anywhere near the 50-day simple moving average. This was the closest we got, was with this sell at the very end of June to end the first half of the year and to end the second quarter. So that was the closest we've gotten to the 50-day simple moving average. But looking back here, you can see there hasn't been any actual contact on a daily basis with it since all the way back here when we were coming off the low. And looking at some individual stock charts, you can see that we probably are looking at, for instance, here on Tesla, they reported, you can see it broke down through its 10-day, it broke down through its 20-day and reversed and came back up. But if it's going to have a couple more days of selling, it really looks like it could be aiming to test its 50-day simple moving average and maybe fill in a couple of gaps here, test above its halfway back on the year and reverse. So that would make a lot of sense following along with the S&P 500. Here is Apple. Apple is already there. It's already almost to its 50-day simple moving average. So maybe Apple is done with the selling and is probably, maybe it goes a little bit lower, but it will lead the S&P by a day. And it will reverse on Monday, and then maybe the S&P will catch up on that and follow it on Tuesday. Here is Amazon. You can see it's got a little bit, it's got a couple of days of selling that it could put in before testing and reversing above its 50-day simple moving average as well. And finally, looking at Google. Once again, in that same spot where it's sort of hanging on its 20-day simple moving average, looking below it but closing above it, and maybe we've got a test of the 50-day simple moving average in mind here. Now, if all these individual names recover and regain and close back above their 10 days, or whatever SMA is right above it from where it closed on Friday, if it all recovers that on Monday, then you know that that postponement of that testimony is what is moving the market right now, and that we are going to go back up again and and maybe front run earnings that are coming out of all these companies on Wednesday and Thursday of this week. Okay, that's it. Hope this all made sense for you and gives you a little better idea of what's to come next week. So keep an eye on all these names that are getting ready to report. Keep an eye on where they are in relationship to their 50-day simple moving average, and watch the S&P 500 follow along with that as well. Have a great rest of your weekend. As always, good luck and good trading.